Hey guys, Luca here, thanks for jumping into another video. Today we're diving into Bitcoin's latest rally and what we could expect moving forward. As always, if you're enjoying the content, don't forget to give this video a thumbs up and make sure you're subscribed to the channel so you never miss out on future updates like this. Now let's get into it. So the reversal is finally here. Bitcoin is once again performing well, altcoins are bouncing as well, and we had a very fast shift from the fear and anxiety and frustration we've seen a couple of weeks ago to now excitement and hype that Bitcoin is performing well. The bull market finally seems to be back and that we could be entering price discovery once again. So now I want us to have a look at some of the posts I made back in early April when everyone was screaming for lower and see what strategy I used, see how I did it, so you can understand what my next steps are going to be. Moving to one of the posts I made back in early April, I said that even though the fear was high, even though after a sell-off like this, it's easy to feel like the worst is yet to come, this is exactly where you want to step back, reflect on the broader market picture, see if there are any fundamentals that have changed in the markets, and this is something that will go on in just a few minutes. And that's where you want to stay grounded and focus on the bigger picture. This is where I said that it's a good opportunity to gradually build core holdings in high conviction companies and other investments for the next year. And historically, moments like that one, like we've seen a couple of weeks ago when the S&P 500 dropped by 20%, Bitcoin dropped by 35% or so, periods like that are historically a good opportunity to buy because that precedes either a midterm bounce or a long-term sustainable uptrend. And we've seen this happening once again right now. Here I said that I had the lowest cash positions I've had since the 2022 bear market lows, because I see that as a mid-cycle correction and not as a recession that so many have been predicting for years, which will eventually come, but I didn't think that that was the time. So in this video we'll go over when I think this recession will eventually come and what will precede it. So make sure you watch until the end to find out my exact strategy. Now in this post I said that this is why I think we've seen the liquidation cascades on Bitcoin over the last couple of months, essentially leading to a short-term pain for long-term gain scenario. So moving back to Bitcoin's chart, in that post I said that this was essentially a short-term pain for long-term gain scenario, where we had this short-term pain. Market makers have accumulated, and this is something I tracked through these liquidation cascades that have occurred over the last couple of months. Essentially what we saw here was a series of untapped lows that developed each time on the low time frames that preceded a tariff announcement, which led to this liquidation cascade. And this has developed over and over again over the last couple of months, has led to these liquidation cascades. And my main thesis on why these liquidation cascades have occurred in the first place is that it gives market makers the opportunity to buy. Market makers need a strong counterparty in order to buy or to sell. When they don't have a counterparty, when they don't have enough liquidity to buy or to sell, they create one. And they do it through these liquidity traps. We've seen it playing out over and over again. This series of untapped lows developing on the lower time frames, which essentially leads to piles of stop losses of long positions stacking on top of each other. And essentially we have a lot of liquidity points sitting on top of each other, which leads to these liquidation cascades. Now, when we have a stop loss of a long position that gets triggered, that leads to a forced sell order that is later on filled by the buy pressure coming from the market makers. As we see, each time the low gets swept, we have a bounce. And we had this happening as well in early April. So this marked the last correction. And this was also preceded by this series of untapped lows. So I thought to myself, and this is also something I highlighted in one of my posts back in March, that this was essentially a short-term pain for long-term gain scenario, where we have this short-term pain in the markets, we have these liquidation cascades and downtrend and frustration on the short term, but that later on precedes a phase where we have a sustainable rally ahead as market makers have accumulated and have positioned themselves for an uptrend. Now this is what I thought back then, and now I think that we're essentially in the long-term gain scenario where we had the pain and now we're having the gain. Well, not all of us. Those who haven't capitulated and those who bought the dip, like me, back in early April, as I said earlier, I had the lowest cash positions since the bear market in 2022. So those will be the people who will enjoy this long-term gain. Now there is the other side of people who has capitulated, who has started to call for a bear market, or who has shorted and hedged right at the bottom, which those people, unfortunately, it's been a short-term gain scenario where they have maybe hedged themselves or maybe have shorted throughout this dump. And now it will be a long-term pain scenario, as I don't think that the market will allow sideliners to entry. And the reason is very simple. We've seen it happening once again in October and November of 2024. We had this accumulation range all throughout 2024, and then we had a very aggressive move to the upside. Now, this aggressive move has two main features. First of all, it doesn't allow sideliners to entry. And second of all, it creates an emotional gap. Now, an emotional gap is a very rapid transition from a state of fear and anxiety to a state of high euphoria and excitement. This type of emotional gap generally leads to emotional biases in the markets, and market participants start to appeal to these emotional biases, such as the confirmation bias. Now, the confirmation bias is something really interesting, and it essentially implies that market participants seek opinions who only validate their own point of view. That generally includes seeking narratives from the mainstream media. Now, that is what market makers want in order to be able to distribute in these high time frame distribution ranges, or like we've seen back in 2024 in these high time frame accumulation ranges. And like we've seen now, once again, they want a very strong narrative, and they want people to be emotionally biased and emotionally attached to their investments. So they seek a narrative to confirm their own beliefs. We've seen it happening once again back in December and January, when everybody thought that Trump will push the price of Bitcoin much higher. We had the US strategic reserve narrative. And fast forwarding to early April, we had tariffs, we had recession fears, we had everyone believing a bear market was next. And they were wrong. Now, this is very important moving forward, because I think that it will have a very similar effect in the next couple of weeks, which is why remaining level-headed and objective will be extremely important moving forward, as I think that those who will flip-flop with their bias will get left behind, or will find themselves buying right at the top into the euphoria right before a big bear market. So my current perspectives, and we'll get on the market structure and the other confluences I've been tracking in just a couple of minutes, but my main thesis right now is that we're in this long-term gain scenario where we have this uptrend, and we'll later on go into this distribution phase. Now, I talked about the emotional gap and the rapid shift from a state of fear and anxiety, like we've seen back in a couple of weeks ago, to a state of complete euphoria and everyone embracing the positive narratives. And I've made my case on this, on how I think the narratives will develop moving on from here. I think it's likely that this rally will be fueled by a high degree of risk appetite, fueled by positive narratives coming from the potential end of quantitative tightening, as we've seen inflation reaching its lowest point since September of 2024, when the Fed has reduced their rates for the first time in over 4 years. And I think that the Fed will finally declare their victory against inflation, which will lead to this risk on period, as everyone will think and will bet on the end of quantitative tightening and the potential start of quantitative easing, which I believe will be one of the main narratives when we'll approach this macro top formation, the start of quantitative easing and more rate cuts, and the potential of a soft landing. Everyone will get really euphoric because of that, and everyone will be emotionally attached. Now, this will stem from this very rapid shift in sentiment. Now, this is also why I said that I don't believe that this market will allow sideliners a second chance to entry. Yes, there will be pullbacks along the way, but I think that they'll be shallow, which will precede a continuation to the upside. Similar to what we saw back in October and November, when the price was going absolutely parabolic. The argument is once again that market makers want to create this emotional gap in order to have liquidity to distribute at the top. So I think that it all comes down to liquidity and market makers to have a counterparty to trade with. This is the same concept I applied for the past months when I was bullish and I was publicly sharing my bullish thesis, saying that I had the lowest cash positions and that I accumulated to position myself for this move to the upside. And it will be the same concept I will apply in this distribution range in order to distribute, while others will be FOMOing in. Now, moving to what my strategy has been over the last couple of months. It has been really simple, actually, and I've been very transparent about it. When we tested these range highs, when we had a, let's say, a consolidation phase, or when the price tested a certain resistance range, like we see each time, we had a clear break below the support line, and then we had this consolidation right below it, with the price testing it many times, failing to break above it, and then this led to these liquidation cascades. And this has repeated over and over again. The main point being that Bitcoin failed to form even a single higher high throughout all of these months. So each time we formed a lower high and continued this market structure of lower lows and lower highs. As we see each time, there are lower lows being formed as well as lower highs. Now this changed since then, and it is clear because of how well Bitcoin has performed over the last couple of days. And I always thought that this reversal will come. Whether the cycle top was actually in $108,000, and this would have been just a complacency phase that would have preceded a continuation into the bear market, or whether this was a sustainable and durable rally ahead if my base case would have played out. I always thought this reversal will come, but I didn't know when. And because of this, each time we tested these range highs, without question, I hedged myself and positioned for downside. And I did this once again at these levels in late April, when we had this initial bounce. From a structural perspective, it didn't look very obvious that this was an impulsive move. There were some clear bearish divergences that were forming. There was this series of untapped lows that has historically, throughout this dump, has preceded liquidation cascades. And so I continued to follow my system and I hedged myself at these levels. Now my invalidation point was very clear. It was the prior high at $88.8 thousand. Now, because I stick to my system, I hedged at these levels and I waited for clear confirmation. Because once again, I didn't know when this reversal will eventually come. It could have been from here, or we could have had one more correction before an impulse to the upside. So I didn't know necessarily when it will happen, but I did know that it will. So because of this, I stick to my system, to what has worked over the last couple of months, as I hedge myself each time at range highs. Then I slowly scaled out of my protective shorts I took at the range highs to then rotate back into my spot holdings. And this is how I managed to accumulate, even though the prices have gone a lot lower than they were back in December, especially on most altcoins. And this is a big lesson. What I want to emphasize is how you guys can stick to your system, how you can tell whether a system is working, whether your strategy is working, and how you stick to it and how you adapt yourself to new market circumstances. Because this will be key moving forward in the coming months, especially if you break above the prior all-time high. Sticking to your system and to one strategy will be vital. And this is how I did it. I waited for clear confirmation and a clear invalidation of my thesis, which would have been this break above the prior breakdown point at $88.8 thousand. So I hedged myself here with a clear stop loss. And since then I flipped bullish on the low time frames and I'm back to being bullish. This is what I did over the last couple of months. It has worked out until it didn't. This is the story of most systems. No strategy works indefinitely. And one thing to note is that you have to adapt yourself to new market circumstances. Once there is a fundamental change, that's where you have to adapt yourself. And what I mean by fundamental change is something that shifts the whole market environment. It can be both on the low time frames as well as on the high time frames. So on the low time frames, it was this break above the prior breakdown point at $88.8 thousand. On the high time frames, and this is where the fear and anxiety comes into play. Over the last couple of months, we've seen Bitcoin in this downtrend. And since then, a lot of people have flipped bearish at these levels, have started to call for a bear market. And there were a lot of recession fears. So I stepped back and I asked myself, has something fundamentally changed on the high time frames that would invalidate my current bullish thesis? That implies we'll still have another leg higher. At that moment, I asked myself that, and it didn't. We didn't have any sort of durable shift. The macroeconomic environment was still the same. We still have a relatively high economic growth. Even with the negative GDP we've seen on the fourth quarter of 2024, I explain why instead of seeing a moderate growth, we've seen a moderate contraction in the economy. And that I think was because of the pre-tariffs imports. And inflation is still relatively low. The labor market is still resilient, as we've seen in the latest unemployment rate and non-farm payrolls, which came in pretty strong. So nothing has fundamentally changed to the markets. So I continued to be bullish at these levels, even with everyone calling for a bear market, even with everyone calling me out for being bullish and for sticking to what I believed it was true. And so far, it seems like it has worked out. So this is how you can stick to your system and how you adapt yourself to new market circumstances. Even with the price going lower, I ask myself, has something fundamentally changed that would invalidate my bullish thesis on the high time frames? And the answer was no. So I sticked to my bullish thesis. So now let's talk about the current market structure on Bitcoin and how it has developed over the last couple of days. Moving to a post I made yesterday, this is my weekend update. It's a series I do on a weekly basis where I cover in detail my perspectives on Bitcoin moving forward. A post I shared back in early April was this one. So it was this Elliott wave count that implied we had this final corrective move before the big bounce to the upside. What my thoughts were back in early April. And if we were to continue with this count, as you see, this last corrective move, which implied that the bottom is in here, since then it seems like we have continued with this Elliott wave count. So it's this impulsive 1 to 5 move, and over the last couple of days, what we've seen is essentially shallow pullbacks along the way, not giving sideliners any opportunity to entry lower. However, it seems like from an Elliott wave standpoint, we are nearing the end of this first impulsive move, and since we're testing essentially the prior all-time high, I think it would make a whole lot of sense to see the wave 2 from this range. I don't think it will be something unexpected, and I believe that if we were to see something like this moving on from here, it will act as a bear trap, as I believe a lot of people will start screaming for lower prices. Everyone will start expecting this triple top that could develop and start screaming for new lows, and that I think could act as a big bear trap to make bears pile into short positions before this major breakout and this impulsive wave 3. So this is my current Elliott wave count I see on the high time frames as well as on the low time frames with this impulse consolidation, and this completed wave 1. And what I'm currently tracking is whether we get a true corrective wave 2, which would imply a price pullback as I highlighted here, or whether we have another sideways consolidation where price ranges just under this high time frame resistance range without any meaningful retrace as the sell pressure gets absorbed. In my opinion, both scenarios are valid, but how do we know which one is most likely to play out? This is where tracking data matters, and this is what I highlighted in my weekend update. So to stay ahead of the move, I'll be tracking closely 3 key metrics. The first one will be funding rate, which shows us how market participants are positioning themselves, whether the majority is bearish or whether the majority is bullish. Secondly, I will track the open interest, and most importantly, the correlation between the price action and open interest. I think it tells a really interesting story, as we'll see in just a few minutes. And last, I'll track the futures premium versus, which tells us where market participants are leaning in. Essentially, the premium metric shows us the futures prices minus the spot prices, which shows us how market participants are feeling both from the perpetual spectrum as well as from the spot spectrum. Generally, what we want to see is spot-driven moves, which imply a high spot volume and not a whole lot of activity on the perpetual side. If that is the case, then moves tend to be durable and sustainable. On the other hand, if the premium metric is positive, then it means that it is a perpetual driven rally, and oftentimes it is not sustainable. So that's why tracking the premium metric is so important. Over the last couple of days, we've seen the price going up and the open interest going down, signaling that shorts have been successfully squeezed. And this is a thesis I've covered in one of my latest updates on X, where I made a very interesting finding, which was essentially that each local top in this small consolidation range at $94,000 has coincided with a local bottom in funding rates. And so the way I interpret this was that shorts were getting protected on the short term, which made bears feel comfortable shorting to lead up to a bigger short squeeze. And we've seen something similar happening back in 2024 in that accumulation range until we had that major run up straight to $100,000. So that's the post I made. And moving forward, what I would like to see for Bitcoin as we're consolidating at this high time frame resistance zone is the open interest climbing gradually, meaning that fresh positions are opening, ideally coming from the short side. Funding rates flipping negative once again, showing that the market expects a dip, and generally whatever the majority expects never occurs. And then lastly, the spot to future prices divergence as the bearish bias keeps growing, even as the price will hold above key support levels. So that's exactly the recipe we've seen before major rallies. So that being said, this is what I'll be tracking moving forward, and I think that staying sharp and remaining level-headed will be what creates an edge in the coming months. This has been the video for today. If you've enjoyed it, don't forget to give it a thumbs up and make sure you're subscribed to the channel so you never miss out on future updates like this. Thank you all for watching, and I'll see you guys in the next one.